During a conference call with Wall Street investors, one of the analysts asked Block stock how the business would react in the event of a recession, something that I think a lot of Block stock investors are also curious about, right? How would Block stock do during a recession? So I thought it would be interesting to share with you the answer given by Block's management and elaborate on how realistic and how the company could react to a recession because the risks of a recession are rising. Let's be real. So let's get into it. So the CFO jumps in to answer the question and says, our ecosystem is driving resiliency to uncertain times. The Cash App card gets both discretionary spend and non-discretionary spend. That's really important, right? The company generates revenue and profits from people using the Cash App. And so during the recession, of course, spending is going to decrease. But it's not all spending that decreases during a recession. It's primarily discretionary spending that decreases. Things that are not necessary. Those are the types of things that decrease during a recession, while people still continue to spend on things that are necessary. Things like food, gas, paying insurance bills, things like that. That doesn't really decrease. In fact, sometimes it might increase because people might say, you know what, instead of spending money at a restaurant, let's spend more money on groceries. Instead of spending money on travel, let's spend more money on entertainment at home. So those types of things sometimes increase depending on the steepness of the recession and a bunch of other factors. But the fact that in 2022, nearly one third of spending on the Cash App card was for grocery, gas, auto, utilities, etc. Those are things that are going to remain even during a recession. They may decrease by very, very low margins, but overall, people still need to buy food. People still need to put gas in the car. That's going to remain even in the event of a recession. So that part of its business will remain resilient. Although I will point out that was only one third of its spending on the Cash App card. What about the other two thirds? The other two thirds of spending could be at risk for Block. The good news I will point out though is consumer balance sheets are robust. What do I mean by that? Sometimes that when I say this, people don't realize the full picture of this, right? During the pandemic, we got a lot of stimulus money into our checking account, so we had a lot of cash, right? Now, if you look at the data, those built up savings are decreasing. But what some people fail to remember is that people bought a lot of long lasting goods during the recession. Things like refrigerators, couches, beds, TVs, computers, phones, tablets. These are assets on consumers' balance sheet essentially, right? These are things that you're not going to need to spend money on again for several years. So in the event of a recession, the likelihood of a expense rising because you need to replace one of those items is lowered now because so much was spent during that time. So consumer balance sheets are healthier than they were before the pandemic, not just looking at cash, but looking at intangible long lasting items as well. That's an important consideration to think about heading into a potential recession right now. That's why I've been saying if we do go into a recession, I've been in the camp suggesting that the recession will be on the milder side instead of on the steeper side. The CFO goes on to say ultimately the signals that we can read in real time across our key indicators across our both consumer ecosystem and seller ecosystem is what enables us to be agile to the environment and move quickly. That's interesting. So Block gets a lot of real time data between its seller ecosystem and consumer ecosystem. They can see spending patterns, they can see sales patterns in their business ecosystem. So if they see a drop off in spending and the recession coming on, they can see it arguably sooner than maybe most other companies. They can see it happening. And so if you can see it happening sooner, you can make adjustments faster than anyone else, and that gives you an advantage during if you go into a recession. You can cut costs, you can stop hiring, you could bring down lending. All of those adjustments you can make quickly because you can get the data quicker and you won't be caught off guard. So that's an interesting point the CFO makes there. From their lending perspective, they take a very data-driven approach. Their risk and underwriting models are updated in real time, both on the individual and the customer, and they have a lot of data. So the individual customer, as well as other millions of customers just like them. That's part of the reason why you've seen healthy repayment behavior across each of these different lending types, which has been true. Block has experienced better payback than historical levels. I don't know how much that has to do with Block specifically or industry wide. Repayments have been much better because of what I talked about earlier. Consumer balance sheets have been healthy, and since balance sheets have been healthy, repayments have been healthy. Consumers haven't been pressed to the point where they need to miss payments. Not yet, and hopefully it doesn't get to that point. So these are customers that we know well, and we have a history of repayment ability, and therefore able to better underwrite. So because they have so much information about their customers, about their clients, they can use that data to make better lending decisions and therefore experience better repayment. So the CFO here makes a good case for why the business would do relatively well even during a recession. And in my opinion, I will agree with the CFO. Not so much in the business perspective, but if I zoom out and just look at the stock price perspective, Block's stock price is already down considerably. It's already down a lot from its highs. So investors are the stock market is already pricing in some risks of a recession into the stock price already in anticipation of the difficulty during a recession. So that's already priced into the stock. But given these factors that the CFO mentioned, maybe the company outperforms during a recession and does better than feared, right? The business is going to decline, right? That's true for most businesses during a recession. Your revenue, your profits are likely to decline. Unless it's a defensive company, counter-cyclical, I won't get into those details. But if it's better than was feared, better than it's already incorporated into the stock price, investors can still benefit from that trend. So to answer the question posed in the headline, will Block stock be devastated during a recession? In my opinion, the answer is no. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.